Take out question number 25. Ram Limited acquired 60% shares. So this is exactly similar to the previous question, except NCI is going to come. Otherwise, almost similar to the previous question. Same time, 2-3 times repeated, same story, same cassette in the exam. Ordinary shares of 100 each on 1st of October. They have given you the balance sheet at the end of the year. Same land and building, plant and machinery investment is given 8 lakhs. Financial assets, other equity, 100 rupees fully paid. Retained earnings, other reserves. Retained earnings showed a credit balance of 60 on 1st of April, out of which dividend was paid on 1st of November, same. And this time you have credited to the retained earnings. Doesn't make any difference, because even though you credit to P&L account, ultimately it will go and sit in your retained earnings only. It's the same adjustments. And you have paid it on 1st of November. So from whatever you have paid later, that means I have received it. If you would have paid prior to my acquisition, my pre-owners would have received it. Fair value, they told you on 1st of October for PP, and for other assets they told you the fair value increases. It may be assumed that the inventory is still unsold and their liabilities also not settled. Assuming other reserves were same, prepare the CFS. So what I am supposed to do first? Step 1, goodwill. For goodwill, what I am supposed to do? FVNA. For FVNA, plant and machinery's book value I want to find out, so that I can find out the fair value increase. Second, I want to know the reserve, so that equity plus reserve gives me the fair FVNA. So FVNA working I can do only with the 2 working notes. So first working note number 1. Book value of PP on 1/10/2011. So what is your opening book value? $2,70,000 is when? Opening or closing? Closing. Divided by 0.90 gives me opening book value. Closing book value divided by 0.9, because I am assuming that 10% is the WDV method. Have they told me, or I am assuming it here? Rate of depreciation 10%. So I am assuming WDV method minus, what is your depreciation for 6 months? 3 lakh into 10% into 6/12. What, 15,000. So you get 2,85,000 as your book value of PP on 1/10/11. Second is the reserve. Anyhow, with this I can take the, now I know what is my total fair value increase, because this plus other 3 items I'll add, I'll get the fair value increase. No deferred tax impact is there. Second, I will prepare the reserve working. I want to know the pre-acquisition and post-acquisition reserves. So that pre-acquisition reserve plus equity share capital gives me book value plus this fair value adjustment gives me the fair value. So I'll write working note number 2. Pre and post profits. Pre and post profits. How much is pre-acquisition profit? Okay. Is there any change in reserve happened? No. Why I'm writing? I'm giving it as a format so that you don't forget it. In exam, they may twist it. There may be some change in the reserves of the whom parent. It will come here. No. Change in the reserve of the subsidiary is what comes here. Because I'm trying to find out how much profit my subsidiary made during entire year. Is there any change in retained earnings? Yes. How much is my closing retained earnings? 1,64,000. How much was opening? 60. Then you say, sir, 1,04,000 is the total profit made by the subsidiary during the year. But wait, this closing 60,000 you got after declaring dividend. If it was dividend was not declared, their profit during the year would have been very high, no? Sorry, closing balance, retained earnings 1,64,000 is after dividend. If it was not dividend, then your closing balance of retained earnings would have been more. That's what we'll add here. Otherwise, you can add it 1,64,000 plus dividend. That's what I'm adding here. I should actually add a dividend to this 1,64,000 only. Correct. Deducting the opening balance. No. The difference between closing balance and opening balance gives me profit made during the year. But since I have already adjusted dividend also, plus dividend gives me the total profit made during the year. And how much is my dividend? 40,000. It is 10% on the nominal value. Don't see. Again, I am telling you, I have seen some students that, okay, they have assumed it 10% of the profits. No. Again, I am telling it some, see, general assumption, yeah, it is on the face value. No, you may come across that. It should not happen. So 1,44,000 is the total profit. You give two breakup, assuming it is not a seasonal business, and say 72,000 is the pre-acquisition, 72,000 is the post-acquisition, and this post-acquisition you are going to take to OCI. Pre-acquisition you will take it for calculation of the goodwill. That means at any point, see, this is one simple thing they have taught us, middle of the year. So it doesn't matter for you on which day acquisition happens. If you have understood this, the crux of what we are trying to do, it doesn't really matter on which day, even though it happens on 28th of April. What do you need to do? On 20th of April, what is my reserve balance? How do you get? Opening reserve plus profit made for 28 days. You get the reserve balance on acquisition date. After whatever profits are done, it is post-acquisition profit. Which one? Total profit, obviously, no. Whatever my subsidiary made total profit, that is the truth. Nobody can change. The only question in the total profit made during the year, on the date of acquisition, how much was my accumulated profits? That's why we make a reasonable assumption that it is earned evenly during the year, and the acquisition happened on 18th of July. So from 1st April to 18th of July, all the profits made is pre-acquisition. From 19th of July onwards till 31st March is my post-acquisition. So it is a very simple thing. I hope you have understood the crux. So anytime any swift changes coming, you should not get confused there. Chalo. So we got, now straight away we will calculate working note number 3, FVNA, fair value of net assets. For this I will go with the share capital. What was my share capital on the date of acquisition? 4 lakh. It's not going to change. They may twist it also. During the year this happened, opening was 4 lakh, some additional, leave it. What is your other reserve on 1/10/2011 or 39/2011? 2 lakhs, because they said this was there at the beginning only. How much is your retained earnings on this day? Okay, for now you start with the opening balance of 60 plus for 6 months period you made a profit of 72,000. You means that subsidiary. Yes, these 3 things should give you book value of net assets. Add fair value adjustment. What all the things? PP, increase or decrease? 4 lakh is your book value, sorry, fair value. 2,85,000 is your book value. Land assumption. Straight away they told 2 lakh, no calculation required. Inventory 30,000, trade payable negative 20,000 because it's a liability which got increased. With this, I got the fair value of the net assets, which is 10,57,000. Chalo. With the 3 working notes, I am ready for step number 1, which is goodwill calculation. With this, I got my opening consolidated balance sheet. Then I'll go to other equity, take the post-acquisition profits, take the closing balance, prepare closing profit. Only this much, nothing else. Any problem, because after this so many other problems came, I have solved using these two. Perfect. No need to worry. At least it will give you speed also. Yes, Vindhya, clear no? Sorry? What I told when I started this chapter, other equity is the life of this particular stand. If you have understood and got that hold, how it moves, that's why you have to spend time. I have given that clarity to you. So you can come back to me asking for explanation. So this time goodwill is what? NCA also comes into picture. So that step 1 or whatever, 1 goodwill. Purchase consideration. How much is your purchase consideration? 8 lakh, assuming it to be at cost. If it was a fair value, possible, no? In the study material, sorry, in the exam question, they may say that the investment in subsidiary at FVTPL, they give, then on 1st October, they invested at, and they classified it at FVTPL. That means at the 31st March, whatever value they show in the closing balance sheet of the parent, it is at a fair value. Then you should look for an information, how much is my fair value increase or decrease. If there is a fair value increase, what you should do? Deduct it. If there is a fair value decrease, add it. That's concept. There is nothing, simple. Add NCI. Which method? If they say fair value method, if they say by chance, then you have to take an assumption that the per share basis of acquisition cost is same. So you take 60%, whatever, 8 lakh divided by 60% into 40%. Sorry, if they say fair value method, but they don't give you the fair value, then you have to take an assumption and you have to take 8 lakhs by 60% into 40%, if at all. Worst case, not that they may say. So here I don't have any problems. Straight away 10,57,000 FVNA into 40% and minus fair value of net assets. So you get a goodwill of 1,65,800. Yes, with this I have got my opening consolidated balance sheet, or at least I got an item which I am need from the subsidiary now. I know the breakup of this. Which all the items is going to affect my fair value, that I know. Fair value adjustments. Out of all the adjustments, which is going to hit my other equity? There are so many fair value adjustments happen now here. Among all these things, which is the one which is going to hit my other equity or P&L? Depreciation on that PP. Is there any item which is going to hit my P&L? No. Why? Because the inventory is not yet sold. Trade payable is not yet settled. That's why at the end I simply add it. Not, I will not take it to other equity. So step 2, okay, can I go to other equity? No. Depreciation is my challenge. So I will prepare working note number 4, additional depreciation on fair value increase. In fact, you could have done there also. Let us follow on practice of doing a separate working note. So what is your depreciation on total fair value? See, on 1st of October, fair value was 4 lakh. October, they said fair value was 4 lakh, no? Into 10% into 6 by 12, you should have charged 20,000 in your CFS. How much is coming from subsidiaries SFS minus actual depreciation charged by subsidiary? See, your opening PP minus closing PP difference is 30,000. Minus half year depreciation is 15. So 15,000 is already coming from SFS. So 5,000 is the additional depreciation. Have you understood this, Prithvi? See, how much is the additional depreciation? 4 lakh is your total fair value. In CFS, you have to calculate depreciation on fair value. Into 10% is the depreciation rate into 6 months. Because the acquisition happened on the half of the year. During this half year, did the subsidiary charge depreciation on their book value? Then already something is already there in the P&L. No, you have to charge only that additional portion. Previously, life was very easy. You used to take 1000 divided by 20 years, and that extra portion only we used to calculate depreciation. But here we cannot do it. So I will see how much depreciation my client has, my subsidiary has already charged. 30,000 is the total depreciation for the entire year. How? Closing book value divided by 0.9. I got the opening book value. See working note number 1. What is the opening book value? Understood, no? So this is my additional depreciation. What I will do? Will I give to parent or NCI? Both. Done? Yes, now I will prepare the other equity statement. I will prepare the statement that whatever other equity and NCI. I will have 2 columns this time. NCI 40%, ConPL, or you can call it by any name as per your understanding. Other equity also you can call it, because ultimately that balance should appear in the balance sheet. Right, step 2, other equity, NCI, other equity. Okay, I will start with the opening balance of NCI. How much? 4,22,800, which I got from my goodwill working. Clear, no, Vishnupriya? Okay, done. I will look into the P&L of the parent. Is there any opening balance of the reserve? Yes, they said same reserve balance 6 lakh. Is there any opening balance of retained earnings? No. Question is very silent. So it's your choice. So I will assume that there was no opening balance of the reserve. Whatever reserve balance, retained earning balance it is shown at the end of the year, that is the profit made by RAM. So RAM profit for the year, which includes with dividend, because they said whatever dividend I received on 1st of November is added to the retained earnings. That's why I can't make assumption that the closing balance of retained earnings is existing at the beginning of the year. Then where the dividend will go? That's why I will assume it to be during the year. Maybe if you want, dividend portion you can keep and unnecessary. No, why unnecessary all these exercises? Simply assume that no opening retained earnings. How much? 1,14,400. These 2 items together make the other equity of your parent. And this includes the dividend received. Did the parent declare dividend to its shareholders? No. Done. I have nothing to do now. I will go to the subsidiary. Did Krishna made a profit? Yes. Krishna's profit. How much? Post acquisition profit we already calculated. How much? 72. Will I take to parent? No. 60% of that I will take to parent. 40% of that I will give to the subsidiary, NCI. But this profit is with the dividend or without dividend? This includes the dividend or excludes it? It includes, no, but you pay dividend also, your actual retained earnings balances are less. So dividend by Krishna. How much you paid? 40,000. But out of that 24,000 you received minus 16,000 you allocated to NCI. So you minus retained earnings here, you added retained earnings here, automatically. See, there is nothing separate adjustment you need to do for dividend. If it was your, what is that called, unrealized profits and all, you have to do 2 adjustments. Here no adjustment, just club it, you got it. Now, is there any other OCI items of Krishna? Krishna's OCI items are there? Any foreign currency translation reserve, revaluation reserve? Nothing, leave it. We'll go to the fair value consolidation adjustments. Is there any fair value adjustment? Yes. On what? On PP depreciation. How much? How much is my fair value depreciation of PP? 5,000. Whom I should give? Both. Add or minus? Minus. Then is there any other fair value adjustment happened on the day of the acquisition? Happened, no? 3 more places it happened. Land and building happened. Is it going to touch your other equity? No, because our assumption is fair value increase was only for land portion. Inventory also increased. Is it going to touch your other equity? No. Why? Because it's unsold. Creditors also got increased. Is it going to touch other equity? No. It is unsettled. Is there any more item? Impairment of goodwill is there. Deferred consideration, interest is there. You might have given deferred consideration, no? You remember in deferred consideration, you find out the present value of the future cash flows. So first year interest is going to come because it's called unwinding. So it will come not in the standalone financial statement, it will come only in the parent's financial, in CFS. Will you distribute to both or it will keep only for parent? Who paid whom? Parent paid to the earlier owners of your subsidiary. NCA will shout, no. Baba, it is a transaction between you and those. See. Okay, understand? It goes like this. Okay, this is done. I'll explain that concept. This is done. So ultimately you get a total of 7,30,600. 4,33,600. Yes, in that my format, everything except deferred consideration we didn't discuss. We'll talk about deferred consideration also, which I should not have told you anyhow, because in examination straight away they gave this in one of the exam without any precedence here. But I'll tell you one adjustment. See, P Limited paid to owners of S Limited in the form of deferred consideration. How much? For 60% stake. 40% is held by somebody else. Now, this transaction happened between P and the owners, and they found out the present value of this and started claiming interest expense. And if they allocate this interest expense to this 40% NCI, if you are that at 40% NCI, will you accept it? You say, Arey Baba, you pay right now, no? Who is getting the benefit by not paying the money right now? P Limited is getting benefit. So take this expense for you only, no? Whether you pay right now, whether you pay after 10 years, what this 40% has to do? They say, for me, nothing. It is, if any benefit you get, you take it. If you don't get any benefit, you bear it. Why you want to allocate the deferred consideration interest to me? This is the logic which can be pushed in the examination question. Clear? Okay. What should I do next? What should I do next? I will prepare the plant and machinery. So closing balance of plant and machinery of Krishna. Again, I told you can skip this. 2,70,000. But this is at a book value. Add fair value uplift. 1,15,000, which you got from your working note, whatever that fair value calculation you have done that, no? Book value minus fair value increase minus additional depreciation on fair value uplift 5,000. Clear? Done? So you got this 3,80,000 is the closing fair value of the closing plant and machinery. Below write notes to accounts. We will do with notes to accounts this problem because I am not feeling good, comfortable. We will do proper this problem question with the notes to accounts. Because rest of the 3 problems anyhow you have told you will do it. Note number 1. I will call it PPE. Rupees in lakhs. I got land and building, R K. How much is R? 3 lakhs. How much is K? Straight away write 3 lakh 60 inside column plus 2 lakh. Total 5 lakh 60. You get 8 lakh 60. Why? Because this land is not sold. Still it is there with you. And this was the book value of it. Take this opening adjustment. And you have got plant and machinery. How much is R? 4 lakh 80. How much is K? You would have done, I would have told, if you skip that previous working, in bracket you would have done that working. 2 lakh 70 plus 1 lakh 15 minus 5,000. 3 lakh 80. So 8 lakh 60 is the total PP. So plus 8 lakh 60, 17 lakh 20 will be the total PP. This is note number 1. And you see here, in the revision time only, in the classroom only, it is taking a lot of time. Exam also will take, no? And remember, if this comes, at least do this PP working. Because PP is little tricky, because you cannot show on the face land and building, plant and machinery. You have to show only one. Inventory and all there in bracket only you do. Followed, no? If this question comes, you follow that strategy. Second, note number 2, inventory. R, K. R is how much? 2 lakh 40. K? Plus 30. Unsold. If it was sold, you would have taken and given to both the people. Huh? Because when you took, you have distributed that. And this distribution should happen even though you have valued the NCI at a fair value, not just because it's proportionate book value, because of fair value means always higher than the fair value. See, there are two methods, fair value method, proportionate net asset method. The fair value increase we will distribute to both the people, telling that if on that day only we have given one share. But what if the NCI is valued on fair value? Still, whatever I have given the format, no, wherever I say distribution, please distribute it. Because fair value method will give you value of NCI more than the fair value of the net assets. So inventory is done. What I do next? Please tell me. You suggest me going forward. What is my note number 3? I don't write financial assets. On the face, I will give that financial asset, trade receivable. R 1,19,600, K 80,000. And the last one is the cash. Ram is 29, Krishna is 16. Yes, with this asset side we have done. All the notes to accounts we have completed. Now we'll move on to the liability side. First I will take equity share capital. I will write balance at the beginning, 10 lakhs. Note number 6. Change 0, closing 10 lakhs. Then I will prepare other equity. Yes, students, please pause the video and prepare the other equity, since already we have done in the previous. I want to see how do you prepare. Okay, at least I hope you face some challenge, no? When I tell you to do independently. Okay, let us see now how my other equity statement will come like. This is note number 7. I'll have other reserve, retained earnings, NCI. See, NCI, this is only a presentation. And in fact, you take any company's annual report, all those depreciation, adjustments and all you will not see. You will see like this only. Balance as on 1st April. You have got only balance for reserve. There is no balance for retained earnings. That's our assumption. Was there a balance for NCI? Yes. In our other equity statement, we have done that. This is my total. But this time, this will not appear in the balance sheet. This total plus this will appear. So NCI is only a presentation here. This one figure will appear there. Now, what is my consolidated profit for the year? In step 2, other than 6,000, other than depreciation, dividend, you add everything. That is parent's share. For NCI also, other than dividend, other than opening balance, you add everything. That is your NCI of the NCI. Now, dividend paid by Krishna, you deduct it separately because dividend requires a separate disclosure, separate presentation. You cannot, alternatively, some could have done that, deducted here, but it is not your profit. No, your profit will be understated because of this. Consolidated profit will be understated. So, dividend has to be separately presented. That's why we present dividend separately. But already it is actually got eliminated by sitting here. Not for this. For this, it is part of this and it got eliminated. And you present like this. In the balance sheet, if you add these two items, you get the total of other equity. And this will be your NCI balance. NCI is only a presentation in this table. Are you very clear? Risk is 1 mark. So understand, when it comes to notes to accounts, the PP notes to accounts is very important because there land and building and plant and machinery is there. Other equity note is very important. Other things are all chiller there. Straight away you go on doing. But in these two places, you have to stop, think, do. Other things you can do it very routinely. Okay. And last, is there any more notes? Allocation. This is what allocated profits, no? Sorry? That you will not get, no, because what about if there is an impairment under partial goodwill method? Only parent would have got allocated. So you cannot tell 60-40 just like this because this includes two portions. One parent profit and 60% of NCA subsidiary profit. So you cannot tell this profit is 60:40 ratio. Impossible, no? Because whatever subsidiary made a profit, in that 60-40 is there. And that 60 is already sitting in the consolidated. Why? Line by line basis. That's why you didn't pass one entry, my share of profit account, like that. You add line by line, automatically 1,54,000 includes your subsidiary's profit also. How much? 60% of it. Why? Because that 40% you removed it and distributed here. Perfect. You are able to visualize. Vishnu Priya, you are able to visualize. So your doubt is this should have been exactly 60-40 ratio. But I say it cannot be. It is impossible because this is fine. This represents 40% of Krishna's profit. But this represents two elements. 100% of Ram's profit plus 40% of Krishna's profit. 60% of Krishna's profit. How do you arrive at this amount? Go back to step number 2, which I told you heart of this working. In that, what is the first item? NCA balance, correct? Did you show it here? Leave it. NCA will leave it. NCA we don't have any doubt. Second item is 6 lakh rupees. You showed it here. From third item till last item, except dividend, you make a total. That is this. And why I am not adding dividend, deducting dividend? Because it's just a different presentation. Otherwise, I can club that and say profit for the year. But it's not a profit for the year because dividend is not profit. No, dividend is an appropriation of the profits. Otherwise, all other items are subject matter of profits, like fair value adjustments, impairment of the goodwill, interest expenses at the consolidation level. All those are my P&L effects. No? My profit during the year, subsidiaries profit of 60% share. All those are items of the profit. Are you convinced with this? This is the one which should fetch you mark, this presentation. And from my working, you should be able to do this presentation and understand why we are doing it. Is there any more notes required? Done? Sure? There's one more note. No, go to the balance sheet. Trade payable. Have you done? So the last one is my trade payables. R is 94,200. K is 34,800 plus 20,000 fair value adjustment. 54,800. So 1,49,000. Like this, if you want to prepare notes to accounts, simple. Go to each item of the balance sheet, prepare notes to accounts. But understand, in these 3 notes you have to give importance. One is PP, other equity. Only 2 notes. Other things you can leave space, do it later in examination, because consolidation should happen first. This is a compulsory question which is going to come to you generally. You cannot afford to sit and do this type of working in first 1.5 hours. Max to max 1 or 2 marks you will leave it, no, take risk. Because see, my experience, I'll tell you, the one complaint, only one complaint came FR was difficult in the recent exam. This is in my all 11 attempts, this is what I heard. FR was difficult. When? November 23. In all other 10 attempts, the only complaint is FR is lengthy, time is not sufficient. So your objective should be to complete 100-mark paper. And that is possible if you do follow some strategies like this, where important thing you attempt and unimportant things you keep space, leave space, max to max you take the risk. It is better, no, rather than not attempting 10 or 15-mark question. Take a risk here, and I'm damn sure you will come back again and you will feel this. That much time you will get, provided you don't sit and think in the examination hall. That you cannot afford, sitting and thinking. Clear? Yes. Now we will prepare a consolidated balance sheet. Yes, students. So please pause the video and prepare. Now it's very easy. All notes are there. This is an administrative thing. Yes, students. So we can compare. So first, your PP is 17,20,000. Already we know note 1. Goodwill has come below this. We don't do any work. Note 1,65,800. Inventory 3,42,800. Receivables 1,99,000. 45,000 the assets. Any mistakes? Anyone? Equity share capital is 10 lakhs. Other equity 7,36,600. See, this is the presentation which would have come there from my working only. NCI is 4,33,600. Trade payables is 1,49,000 and short term borrowing is 1,60,000. Write note assumptions. Yes, one problem we'll do it fully end to end. Investments at cost are carried at cost in SFS of parent. Fair value appreciation of rupees 10 lakhs is only for land, not for the building. Twist may happen in the examination. Building depreciation rate they may say. Then we have to assume this fair value appreciation must have happened only for the building. Otherwise, why on earth depreciation rate of the building they should give? Third, depreciation on P&L, P&M, plant and machinery is on WDV. Yes, if you write reasonably 3, it should be okay. And the fourth one is you can write fair value on inventory does not need any write down. Yes, with these 4 assumptions, you will complete. And if they give you in the examination question, you should not write this, because writing this of no use. Already they have given. Yes, students. So now you have understood in detail. See, this question came in May 18 examination, first time. So hold, sub and S sub were there. So you please read it. I don't see any adjustments required here, anything special. I think it's a repeat question. And if you see here, prepare a consolidated balance sheet, should comply with relevant Ind AS and Schedule 3 format, 15 marks. Okay, what I expect you now, right now, whatever workings you want to do, please do it, whatever we have done. But when it comes to the balance sheet, prepare only for PP, note and other equity, and then prepare the balance sheet. Other notes to accounts is a waste of, like, you can practice it. Only for PP and other equity you prepare the notes and then the balance sheet. Okay. Yes, students, so please pause the video and do this. Let's compare the answer. Yes, students, so we'll compare the answers, and if you see, there's no catch here. It's a very plain, clean question, which just appeared just like the study material question. So, no, you didn't see anything problematic, no? And was it a first compulsory question with 15 marks? So step 1, you would have gone with the book value of the PP and you got 28,50,000 as a book value of the PP. Say, I can say 1 mark for this. Then the fair value of the increase in assets, what we have done, we have added it in the step 3 only. So 32,50,000, which you will find your working note number 3 probably. So pre-acquisition profits and reserve will be 7,20,000, 7,20,000. So it was 72 in the study material for the second question. Okay, so fair value are not calculated. There's only fair value increase I did, which we skipped this step actually. This particular 32,50,000 we added later in our third step only. I will change this. Okay, so did you get 7,20,000, 7,20,000? No mistakes, no? Then total fair value of the assets, share capital, reserves, retained earning, and that 32,50,000, I think you must have done it here. This is what we have done from the beginning. Okay, so you got 1,05,70,000. Next step is to calculate. Yes, we are done with all the fair value. We will calculate the goodwill. So 68 minus 105, 3770 is your fair value of the gain on the bargain purchase. In study material also it was a gain for 100% acquisition. We will calculate the additional depreciation, which is 50,000. So total depreciation is 2 lakh on fair value, minus already coming from the subsidiaries 1,50,000. We prepare the other equity. We take the opening balance of the reserve, profit of H, sublimited post acquisition profit, dividend we deduct, depreciation on increase, gain on bargain purchase. 99,84,000 is your total of the other equity. Any mistakes up to here? Okay, right? Then I will go to the notes to accounts. I told you just prepare 2 notes to accounts. Did you get the total PP 1,72 lakhs? Yes, other PP workings are okay. I will say we can take a risk there because it's simple addition 34 lakh. We will straight away skip to the last one. Trade receivables, CC, simple addition. This notes to equity share capital also fine. But I will stop again at this one where you have written opening balance 48 lakhs, profit for the year is 1814, dividend paid is separately presented 4 lakhs, no NCI, 37.70. So this total will match with the other equity. Yeah, this presentation I am interested. Yes, Vindhya? Okay, no? Everything is fine. No shame. Trade payable, leave it. So final my consolidated balance sheet will be PP 1,72 lakhs, inventory 34,28,000, trade receivable 1996, 4,50,000 is the cash, 2,30,74,000 is the total assets. I hope you have not referred previous one. See, you have done it very, and more practice, no problem even though you have referred it, but practice it. See, if you can do it within somewhere half an hour, this 15 marks question is great. That should be your objective rather than like much early. In 20 minutes, if you can solve this, well and good. And if you see, this examination question ditto. Next question also ditto came as it is. Of late, they started to give certain adjustments there. Equity share capital was 1 crore, other equity 9984, bank overdraft was 16, 2 crore 30. I am more interested to know now whether you have written assumption or not important. Have you written one heading called assumption? See, this is I am repeatedly telling students, because if you don't bring that practice while practicing, now what is the guarantee for me or you that in examination you are going to do this? So while practicing, I am not expecting you to write, but at least note that yes, I have to write it. Or did it really skip out of your mind? No, forget it. Let us be honest. Did it skip out of your mind? That is the problem. Or at least, no sir, I know this. I thought it is why you have to write it again. That I am okay with that. But if you have really skipped out of your mind now, the probability that it may skip out of your mind there is very high. So while practicing these assumptions, just keep a note to make these assumptions. I see, because simply you are losing 2 marks, no, despite you know that. Okay? Yes. Again, this is the same assumption. One more question came for your May 19 examination. Okay, this time notes 2 and all not required. I just want one consolidated balance sheet, and let me see how fast you can do it. See, today it is 12:20, 12:30. Let me see how fast you can finish only balance sheet. Whatever workings left to you, because you know now all working is also same repeat question. This time there is a NCA is there, I believe. It is a 70% acquisition. This is that Ramakrishna repetition. So please read this. It is a 15-mark question, that too, but it is not a compulsory question. What notes you do left to you. I am interested to get one opening consolidated balance sheet as early as possible. Let me see how fast you can get. Yes, students. So please pause the video. I will tell you also how fast somebody has come. You can also keep it as a benchmark. So 20 minutes is the time taken on an average. Yes, see, to be successful, you need 2 things, students: accuracy and speed. And if you want to be, because I think I told you earlier also, if you are not accurate, no value for it, for our whatever work we do. Forget about this, anything. Even we manufacture one car, it is a defective car. People will not value it. Now, if you want to be accurate, you have to follow certain steps, keep in mind. And that steps you have to follow in exactly same sequence. Speed, because you have to give importance to speed also. Speed you can achieve only by cutting down unnecessary steps. Now, if you see this consolidation, within 20 minutes, you are able to get one consolidated balance sheet. Are you confident about it? You got one confidence. Now, why? Because unnecessary steps you have cut down now, not preparing that notes to accounts and all, because you will waste at least for another 15-20 minutes into that only. Now, you got accuracy, you have got it with the speed also. Like this, your first objective in FR or any paper is to get that accurate answers by following proper steps. So, steps you should be automatically should comes to your mind. You should not think there, what should I do next? Automatically, by looking at the question, okay, step 1, this equity, second step, step 2, step 3, step 4, which is important to you, that practice should be there with you. Then whatever time is left, it is for you only. Sit and do the beautification later. Okay, let us compare the answers now. Did you see any catch? No, I don't want, I have not read this. And before that, I should tell you one more thing. The first May 18 examination question came, no? You know what they have done? They have, see, there were 2 types of question. One question is on 100% acquisition, another is 60-40. This is DF, this is RAM. You know what they have done in that May 18 examination? RAM's number they have taken. That's why you got that pre-acquisition, post-acquisition, 7,20,000, 7,20,000, no? They added one extra 0. But that number is for that 60-40 question of the study material. Those numbers they took and they said 100% acquisition and purchase consideration they changed. That's why you, while solving problems, you get that 60-40. That same, sorry, 72-72. You remember in study material 72-72, but that was for another question. So these type of things they do. Okay, so first I start with the book value 4,44,600. Did you get this number? I start with the pre-acquisition, post-acquisition profit 1,18,540, 1,18,540. Okay, I don't want to discuss. You got these numbers. Fair value of the net assets. I have changed the format. Okay, in all the study revision also you will get this format only. Book value and the fair value adjustment 16 lakhs 55 140. But no mistakes. Okay. No, we have taken, no? Dividend paid is 74,880, right? Huh? It was 12%. Oh. See, they caught you, no? They caught you. This is exactly what happens. When you sometimes practice so many times, those numbers, those things, and that's what they do. See, 72, 72, 7 lakh 20, 7 lakh 20. Your mind will fool you by calling certain numbers which is not there in the question paper. At least, okay, if you had done previous problem, see, this is a different problem. You see how your mind behaves. It will call some number which is not there only. Why? Because your practice gives you so much confidence. That's why whatever amount of practice you do, be like focus there in the examination question. Simple, no? Despite lost, right? Anyhow, no. I want you to make such mistakes here which would have happened in the examination hall otherwise. Which you don't know. These things are happening to you. Correct, no? Yes, so 16,55,140 is the answer. Okay, anybody else? No mistakes? Goodwill calculation 89,402. I'll go to the additional depreciation which is 7,800. Yes, Vindhya, this depreciation fine. Other Dhanashree, okay. Now I'll go to the other equity which is the most important for me. I say I get a 11,39,502 versus 5,07,300. Sorry, you made a mistake. What was the mistake? See, 6,24,000 is the fair value on the date of acquisition into 10% into 6/12 minus how much you have already charged. Go to the working note number 1. You see how much 6 months you have charged. That is what amount. That's the same amount. You took full years. Mistake. Again, see, you do mistakes subsequently, fine, but initially if you do know, it will have a cascading effect for subsequent numbers. That's why that 20 minutes you are spending, see, you are spending a quality 20 minutes. Because if this problem can be solved in 20 minutes, then spend that quality time there. Be extremely careful. Then, okay, you lose somewhere that alertness, fine, at later stage. Is it fine, students? Any mistakes here? No, that's fine. See, cascading, you don't tell me again. I understand cascading will have. But other than that, any other mistakes? No. Good. So I'll go to the closing balance of plant and machinery, 5,92,800. Okay, you might have skipped this. You might have done that plus minus in the face of the balance sheet. I'm okay with this. We'll come to this number later. Then notes to accounts, you may not have done. No problem. Let us check these numbers at the end. Okay, now only you check in the balance sheet. PP 1341, 600. Plant and machinery. Okay, so total PP 2683 200 you must have got. One single number in your balance sheet. Inventory you must have got 5,34,800 because these notes will go in the same sequence. Trade receivable you will get 3,11,300. Cash 70,100. Equity share capital same story 1560. Other equity also I don't expect you should prepare, but you would have put 936 plus 203 and 5,07,300. Where you have shown consolidated profit for the year and this dividend paid during the year. No mistakes. Okay, anyhow, I can't expect because I didn't tell you to prepare this. So you have got 2,12,400 is your trade payable. Short term borrowing also 2,69,600. So now if I go to the consolidated balance sheet, 36,88,802 is my total of the balance sheet. Clean. Followed? So this is my format I presented, and I'll show you some of the time they expressly tell don't prepare the notes to accounts. Say for example, next examination question. So if they tell, we should be in a position to do it. So this is my 1560, 1139, 502. This is my balance sheet. So you understood the steps, processes, how it happens, how practically it happens. See, solving examination problem is fine, Baba. Tomorrow you are going to, you are qualifying, you will join Big Fours. Big Fours, your first assignment may be consolidation only. At that time, you should not think, oh, in that format it was not. Which format, Baba? In real life, think in journal entries there. Speak in terms of journal entry with the senior. Seniors will ask you this thing only. And in fact, they will give you, do it. Start with the journal entry, see how the effect is going, where you may have to spend time there. Yeah, seniors are there to guide. But if you have not got the concept, it becomes difficult. Yes, so the assumptions noted, no? Good. Good, this is another new. Just note down, not required to be noted, just assumption, enough. Yes, so the last question for consolidation, from this we can move to chain holdings. Again, I don't want to read this question. Because see, this question, every single student in India faced for the first time. Just like in November examination, some consolidation question came for the first time, no? Certain questions. Like this question came for the first time. I want you to pause the video, read it yourself, understand it yourself and do it. Then we will compare it. Okay, strategy number 1. Remember, please follow, please listen to me. In examination, you get a question like this. Don't touch it, don't read it. Just leave it. Doesn't matter, is it one question, one name. Same thing happened recently. People who touched the first compulsory question of consolidation, no, they literally lost it. Lost in the sense, they spent considerable amount of time. Later, after touching, they realized so many things are there. Bonus issue, God knows from where they have given all those things. Now, after you touch, you realize this question is not a repeat question. Followed, no? After you read this question. So, strategy 1, just don't read it fully also. The moment, since at least good Baba, you have got 15 minutes time to decide. We didn't have that. If I was there, by the time I come here, no, I'll not continue reading. Why waste of time to read it? It's something totally new. That's what there is. See, in 1 or 3 have you come across something like this? Okay, deferred consideration, I would have gone further. Okay, at some point of time, the moment I sense it, no, it is nothing, I will not continue to read. Follow, no? Yes. On 1st April, A Limited acquired 80% of the share capital of S. Acquisition date, the share capital and reserve stood 5 lakh and 1 lakh 25. This is 2017 and 1st April only. A Limited, okay, so this means that my net book value was this on that day. A Limited paid initial cash of 10 lakhs, additionally issued 2 lakh equity shares at a nominal value, but its fair value was 1.8. So into 1.8 gives the equity share consideration, which includes 0.8 premium. That we have done already. It was agreed that you would pay further 5 lakh rupees after 3 years. So this 3 years present value factor is 0.75, multiply with this, you would have taken the present value factor of this. The shares and deferred consideration have been not recorded by A Limited. Yes, in CFS you have to record. So this is the difference is the share premium. Now below is the balance sheet at 31st March 2019. That means not at the end of the first year, end of the second year they gave you. But it doesn't matter, I told you, whichever they give, you have to always go back, first find out the goodwill on the date of acquisition. That's your first step. And the difference from that day till now in the net book value is nothing but the profit earned by the entity, subsidiary. So cumulative profit for 2 years. In your other equity working, you will get the profit for 2 years now. 1 year is intermediate, left now. Now they have given you the property, plant and equipment, investment at the cost, no assumption. Inventory, receivable, cash, share capital, retained earnings they have given you. Very plain, clean balance sheet. No much adjustment. On the date of acquisition, the fair value of the plant exceeded the book value by 2 lakhs. Oh, that means that book value plus 2 lakh if I get a fair value of net assets, tax percentage is not given, so deferred tax is not going to come into picture. So I need not follow something like any individual plant and machinery, backward working, split of reserve not required because it was not at the middle of the year. It was at the exactly on one particular day at the beginning of the year. So if it was middle, split of the reserve, pre-acquisition, post-acquisition was required. Otherwise that doesn't, I don't need that. So consolidated goodwill has been impaired by 2,58,000. Now which method of goodwill to be followed? A limited fair value method. That means this had to be split between parent and the subsidiary. So cumulatively whatever goodwill I am going to calculate, that I need to impair now. This is a post-acquisition adjustment which has got two legs. Now 20% interest was 3,80,000. They only gave you everything. Okay, so fair value adjustment only 2 lakh is there, remaining 5 years. So your 2 lakh into 2 by 5 is the adjustment now, because this cumulative depreciation will come for 2 years. No, if you see at the end of the year, first year you would have done the depreciation, they didn't ask you the balance sheet, straight away you jump to the second year. So you are required to prepare the CFS, consolidated balance sheet, except notes to accounts not required. Very good. That means very beautiful question, but a conceptual question, which I don't expect you to touch, but later no, the possibility of you doing this correct is very high. Once you have crossed that threshold of 1.5 hours, where you would have chosen the best questions which you could have done fantastically. Okay. First, working note 1, goodwill working. Did you calculate the purchase consideration of 1735? Easy, no? And NCA at a fair value 3.8, fair value of the net assets 8. So 12,90,000, big number, at least 3 marks so definitely you would have got for this. And I'll show you the related answer also. That's why don't lose your heart. When you do at last, whatever you get, bonus only for you. First, if you touch, problem. What is my step 2? Other equity. Okay. Yeah, sorry. What is the mistake you made? No, but they said very clearly you have to use a fair value method, no? So if you have used this, that means, see, they said very specifically in the last sentence. Uh, 8 lakh, okay, you took only 80% of the fair value. Okay, not acceptable, because, yeah, again, you should think, because we always take 100% of the net assets, whatever, how much is NCI? 30%, no? 20%, and purchase consideration you paid for the 80%. This is what we discussed in 103. So this is an L3 question where certain concepts they took from 103, which is not difficult, Baba. That's why you should develop that confidence in the new upcoming syllabus. Initial days they may do it, but upcoming, after 2 years, 3 years down the line, they may give you questions like this only, mixed questions. Now I need an amortization schedule. Why? Because interest expense I need for 2 years. Because they asked me the balance sheet at the end of second year. So first year 3,75,000 what you recognized would have got amortized and it become 4,53,000 at the end of second year. Now balance sheet should show you this value. So 2-year interest cost is 78,000. Whom I will give? Is it going to affect your consolidated P&L? Yes, because this interest expense is not there in the standalone P&L. See, amortization schedule, whether you are prepared or not, I am not going to ask you. But did you had an interest cost of 78,750? That I am going to ask you. Why? Because, see, understand logically, 2 years back you discounted it. 1 year over, you are in the end of second year. Obviously, this value should increase to 4,53,000. No? Your closing balance sheet should show this. Now we will go to the other equity calculation. I will start with the opening NCI balance. Retained earnings, closing balance I will take straight away. I don't know whether it was opening or closing, God knows. Yeah, any interest expense, not income, because you are not paid the consideration. No? See, I don't know whether this is an opening balance or closing balance. Leave it, no, just dump that closing balance. If they asked you to present, since they said other equity notes to account not required, why you are interested in the breakup? How much is profit earned during the year? How much is the opening balance? Just take the closing balance, 14 lakhs. What is the post-acquisition profit of subsidiary? See, your closing retained earnings is how much? 3 lakhs of subsidiary. At the date of acquisition, what was the retained earning balance? 1,25,000 which they gave you. They didn't give the balance sheet. This difference is nothing but the profit, no, which is increase in the net assets. So minus this 1,25,000 from 3 lakh, what did you took? Full 3 lakh. That means what you have done, no? The pre-acquisition profits also you have treated it as a post-acquisition profit, because 3 lakh is the closing balance at the end of second year. Which, how you can assume? In the face of when you started the question only they told, no, on the date of acquisition there is 2 years, obviously, no. At that time means your reserve is something which gets accumulated, no, Baba. Did you pay the dividend? Who can bring you down the reserve? Either dividend or some straight away adjustment expenses or transfer to other reserves. Nothing like that happened. So obviously my 3 lakh must be having 1,25,000. Have you deducted this? I think this must be your difference. So this balance will get distributed to 2 people here. Profit. Depreciation on fair value increase. Cumulative for 2 years I need now, not 1 year. If it was 1 year balance sheet I would have taken. So 2 lakh divided by 5 years into 2 years, this I'll distribute to 2 people. And this is one case where you have to understand where you valued NCI on fair value, but the fair value adjustment you distributed to both the people. This is the only one question where we have got that understanding from ICA. All the places where the fair value adjustment was there, NCI was valued on proportionate net asset basis. This is one question where the NCI was valued on fair value basis, but the fair value increase is distributed to both the people. Yes, so that means we understand that is as per my format, whatever I tell, irrespective of the method of valuation of NCI, you have to distribute to 2 people. Finance cost on deferred consideration 78,750. This required 2 adjustment. One in the OC, other equity, another is the increase in the deferred consideration. Goodwill impairment, they only told you easy. So distribute it between 2,06,000 and 51 because you followed full goodwill method. Not easy, simple, no? Sorry? Yeah, your accounting entry is finance cost to deferred consideration. Later you transfer P&L account to finance cost, NCI account debit to finance cost. Because finance cost is the nominal account. Deferred consideration closing balance increased. Where is the opening balance? It is something coming only, that's why it's coming from the goodwill entry. When you calculated goodwill, did you thought about one goodwill entry there? Deferred consideration is going to come? No. Just like NCI and goodwill. Now I will go to the PP balance. What is my PP balance? 15 lakh as per as increase in the fair value minus accumulated depreciation plus A limited PP balance. Did you get 7120? Come on, this is normal, no? In your balance sheet, the PP1 figure which I was continuously asking you, at least they didn't tell you plant and machinery, land and building here. That's what I'm telling. These workings will fetch you mark even though you have not got full balance sheet. I'll show you suggested answer. That's why don't lose the heart, or do whatever you know about it. Don't sit and think. Objective should be get as much marks as possible. Because for me, at least 2 marks I would have allotted if I was the evaluator or if I would have been told how much you will devote. Because this is one important working. Current liability, A limited, 2 liabilities plus deferred consideration. Why it is treated as a current liability? Because it is due in 1 year from now. If it was previously, if they would ask me the first year balance sheet, I would have shown as a non-current liability. Because it is due from 2 years from now. So current liability total will be 2353,750. Okay, so straight away I'll go to the balance sheet. PP 7120. Did you get? Okay, you missed. What did you miss here? Deferred, no, PP. I'm interested to know PP. What did you miss? Fair value. But you have taken for goodwill. No, your balance sheet will not tally. Depreciation. You should take it for 2 years. That's what. Well, not taken, but we have already all the time we have been doing it. Goodwill with impairment, the second leg is 16 in other equity. Current inventories 550 plus 1 lakh, no fair value adjustment. Financial assets, trade receivable, no fair value adjustment. Cash and cash equivalent. See, maybe 1 mark or 2 marks. Because see, if you ask me, this is a They may give you, but if you see, anybody can. There's no adjustment. That anybody would have added it and did it. But do it. See, 1 mark also important, Baba. Do it. That's why don't lose the hopes. Just do it. That's what. But when at the end. This because that's why you should not touch these questions only as part of your strategy. At the end, 1 mark here, 1 mark there, 2 marks there. It's good, no, Baba. At least 6 to 7 marks you are able to score out of 15. You feel that your attempt is only in 85 marks because it's a 50-mark question. But no, your attempt is somewhere in 92 marks because 6 to 7 marks you would have got, no, here, there and all. But problem is this will impact your next question. Next paper. That's why no emotions. Anything can happen. Okay, total assets 9652. Now I'll go to the equity share capital. Straight away I'll add other equities. They only told me notes not required. So I'll write in the brackets. No. Retained earnings 11 lakh 90 plus securities premium is going to come from my opening consolidated entry. Did you show this securities premium? NCI and non-current liabilities, but current liabilities, I get 9650. Okay, so actually when this question came, no, it gave me more confidence about my 2-step model. Previously I was having 7 steps, 8 steps, God, what I was teaching. But after this, no, any problems, again, one more new model came now in, what is that called, chain holding. I'll follow the same method. I'm able to do any questions coming, I'm able to do with this. But I realized one thing, that other equity is the catch. Current liabilities, you have got that, this thing, no, normal 2 plus deferred consideration, which is coming from amortization schedule. Now, I will show you the ICI, okay, notes, since the question is not required to prepare notes to accounts. Note 2 columns had not been shown, assume the face value is 1 rupee, leave it. See, this is suggested answer of ICI. So, they have taken rupees in thousands, doesn't matter, you could have written in full value. Consideration they have calculated, net assets they have calculated. See, step marks will come for this, maybe 1 mark for this, 1 mark for this. You have goodwill calculation, say 1 mark for the goodwill calculation, so 3 marks, so straight away you got. Property, plant and equipment, say 1 mark, 4 marks, no, I am telling from my side. Calculation of the post acquisition gain, say 2, 4 plus 4, somewhere like this, I don't know. And if you see this particular question, did you see the calculation of the post acquisition gain and all they have done? They have done in somewhere what format I was suggesting it. Okay, depreciation, everything year only they have done. See, they have got a consolidated retained earnings, which is nothing but our consolidated other equity balance. Calculation of deferred consideration, which I prepared in the form of an amortization schedule. Calculation of the current liability balance, because the deferred consideration had to be shown as a current liability. Maybe 1 mark they must have allotted. And balance sheet, okay, anyhow, balance sheet is a normal thing. Clear, students? Understood the consolidation? Confident? Looks simple? Looks simple? Looks simple, enough. That's very important. That's my objective. It should look simple. And actually, in reality, it's simple, provided you practice. Yes, next we will start with the chain holdings.